and welcome to this masterclass on Anytime, Anywhere Banking. I'm John Beck, the Banker's Technology Editor, and I'm joined today by NG Subramaniam, President of TCS Financial Solutions. So I'd like to talk a little bit about how banks can improve their performance, meet customer demands, and gain efficiencies by taking advantage of new technologies. But let's set the scene a little bit first. Banking used to take place only during business hours and only in the branch. Obviously, that's not necessarily the case anymore. So how are things changing and why?
I think branches will continue to stay as the main channel for customer touch points. It will continue to be the source where banks will meet their clients and do business. But having said that, there are two important drivers that has changed this behavior. One is convenience. The second is connectivity. People want convenience, and people are connected to their friends and marketplace today. They are able to do things that hitherto it was possible only in a branch. And it's all about getting things done, time to market. In other words, time to market is just not necessarily applicable only for banks. It's equally applicable for clients and their banking needs.
Sure. So customer demands are obviously changing, but how does that differ in different business segments, say transaction banking versus retail versus capital markets, for example?
I think people change jobs, people change houses, personal relationships, but they are not seen to be changing banking relationships. But in the last 12 months, more than 1 million businesses have changed banking relationships, so to speak. Right? It's really a question of trust. Trust has become the most overriding agenda, and people believe that most banks do things to shore up their bottom line at the expense of its customers. Right? So from that perspective, people don't want to pay for having an account, but they don't mind paying for a trusted advice and a service which is value adding. Right? So it's all about, whether it's a retail segment or corporate segment, right? It's all about getting the right value and right service at the right time. Right? And because of the connected world and because of the marketplace in which they are linked to, people have a choice. People have a plethora of options to negotiate the best deal that they want to have. Right? So from that perspective, loyalty for the sake of loyalty is a bygone virtue. Right? People want to have the right service at the right price at the right time, irrespective of what segment it is.
Sure. And if banks aren't providing this, then obviously they're going to lose customers.
No, absolutely. I think it's a question of customer retention, and it's a question of losing the customers' market share or share of the wallet. Right? And one has to be listening to the customers. One has to provide the value enrichment services and the convenience services that the clients are looking for. And the job for the banks is not easy indeed, because they are dealing with heterogeneity of clients here. Right? You've got aging clients who really want that personalized advice, personal touch points. They probably want to visit the branch. They want to see something in the paper. They want a printout with the officer's signature so that they feel secure, they feel safe. Right? But on the other hand, you have the Gen Y customers who just don't want to even know where the branch is, don't even want to come to the branch. They want to do everything online, and they have probably the best deal that they can negotiate online. Right?
Sure.
So in that context, you have to deal with technology which is able to satisfy both these client segments, and internally your organization's training efforts to deal with these kind of clients is also varying.
Sure. So technology is obviously important for holding on to these kind of various disparate customer segments, but it can help provide efficiencies too. How important is that to banks at the moment?
I think technology is extremely important. If you really look at what banks are facing today, one is that there is an uncertain and volatility in their macroeconomic environment. Second is there is a heterogeneity of client expectations that comes in. Third is they are facing with a complex IT infrastructure. And it's all about getting things done by the right technology at the right time.
Sure.
Right? it is, if you really look at in this context, most banks also have a growth agenda which they want it to be diversified and they want it to be efficiency. And innovation comes in to drive both growth and efficiency. In that context, if you really look at what banks are trying to do is to really run a marathon and 100 meters together at the same time, right? So it's in that context, the technology rationalization assumes greater significance. And it's all about getting the infrastructure right, getting the application landscape right. It's getting the operations integrated properly to deliver the lower cost per transaction that they need. It means that, you know, sometimes in some banks, replacing the core systems. And some of these things, some banks are wary about doing this, but hopefully not for so long.